Your credit score is a price tag, not a number, a price tag. The bank charges you more or less for the exact same loan, the exact same car, the exact same apartment based on 3 digits in a database. And once you see what that price tag actually says at every tier, you can never unsee it. I spent over 20 years in banking, including about 10 as a branch manager and a district manager. I watched customers walk this ladder. Some climbed all 500 points. Some never got off the bottom rung. Today, I'm going to walk you through every tier, 300 to 850, and tell you what the score actually costs at each one. Pay attention to the math. It will change how you think about your own number. Quick disclaimer before we get into it. This video is for general information only. Nothing I say here is legal advice, financial advice, or tax advice. Your situation is your own. Please talk to a licensed professional before making decisions that affect your money. The customer stories I share come from real experiences across more than 2 decades in banking. Names, locations, and identifying details have been changed. The lessons are real. The specific people are protected. One more note before we get into the numbers. The rates I'm about to share were pulled from current data at the time of recording. Rates move every week. By the time you watch this, they may be higher or lower. The point isn't the exact percentage. It's the gap between tiers. That gap stays the same whether rates are at 6% or 12%. Tier 1, score 300 to 499. The penalty floor, I had a customer come in at 430. She didn't know how she got there. A medical bill she never opened, a repo from a car she co-signed for, and no real credit history of her own. Watch what the score charged her. She applied for a standard credit card, denied, store card, denied. A $650 apartment, the landlord called the next day and said the unit was rented. It wasn't. The next landlord asked for first month, last month, and a $700 deposit. She paid $1,950 before sleeping there one night. She walked into a buy here, pay here lot. They put her in a 2016 Honda Civic at 24.9%. $412 a month for 60 months. Total interest, $10,220 on a Civic. Not the car, just the interest. Her insurance went up $47 a month. Same driving record. The system has a price for you down here, and it collects every single month. Tier 2, 500 to 579. Something is finally moving. She paid off one collection account. She got a secured card, $200 of her own money for a $200 limit. She got a subprime card with a $300 limit, around 28% APR, and a $75 annual fee. She took it and treated the fee like rent. It was the cost of building history. She tried a credit union car loan. They came back at 18.4%. On a $15,000 car, that's $385 a month and $8,100 in interest over 60 months. Better than the buy here, pay here lot, but still expensive. Apartments that don't pull credit are in neighborhoods you didn't want. She took one. 7 months of on-time payments. The score barely noticed. But here's what I want you to hear. The work was real. Every payment on time, every month. The system is slow to reward you down here, but it is watching. Tier 3, 580 to 619. The first real door opens. 14 months of on-time payments. Her secured card graduated to unsecured. The bank refunded the $200 deposit. First time the system gave something back instead of just taking. The FHA mortgage minimum is $580. She qualified. The rate, 7.4% on a $220,000 home. That's $1,124 a month in principal and interest. Over 30 years, $328,000 in interest. On top of that, $110 a month in PMI until she hit 20% equity. She decided to wait. Smart move. Her car loan dropped from 18.4% to 12.5%. On $18,000, that's $6,160 in interest instead of $8,100. Same car, $1,140 saved just from 40 points. Every 20 points starts costing less. You can feel it in the monthly payment. Tier 4, 620 to 659. The walls start coming down. She asked for a credit limit increase. $500 bumped to $1,200. Didn't spend $1 more. Her utilization ratio dropped to 18%. That single move pushed her score up 7 points. The mortgage rate dropped from 7.4 to 6.9%. That's $73 less a month, not because she earned more, because the score moved 40 points. She got approved for a real rewards card, 1.5% cashback, no annual fee, started earning money on groceries and gas she was already buying, car loan, 9.4% now, down from 24.9 3 years ago, same car category, thousands less in interest. The landlord ran her credit, she passed, standard deposit, no double rent. She moved in the same week she applied. At this tier, you're not preferred yet, but the walls are open enough to walk through. Tier 5, $660 to $699, approved but not preferred. Here's the cruel part of this tier nobody talks about. 2 years of clean payments, 3 cards, no collections, low balances. You qualify for almost everything now, but you're never offered the best price. Always one rung below the headline rate. She refinanced her car from 9.4 to 7.6%. $600 back in her pocket over the remaining months. She got a Chase Freedom Flex card. 5% on rotating categories, 0 annual fee. Real money on real spending. Conventional mortgages open up now, not just FHA. 6.8% with 10% down, $1,432 a month. But that gap between her rate and the best advertised rate, that's roughly $60 a month. $720 a year, $3,600 over 5 years. Her record is clean, her payments are on time, she's still paying the premium just for not being in the next tier. Push for $700, the premium starts to disappear. Tier 6, $700 to $739. The penalty stops collecting. She didn't do anything dramatic to get here. She just kept paying, kept utilization under 15%. Time did the work. Pre-approved offers started showing up in her mailbox. Real ones. A travel rewards card with a 60,000 point bonus. A cashback card with 0% for 15 months. She didn't apply. They came to her. Mortgage rate, 6.6% now, down from 7.4 at 580. On a $250,000 home, that's tens of thousands less in total interest over 30 years. Same house, same bank. Just 138 points higher. Car loan at 7.0%. 2 years ago, she paid $10,720 in interest on a $14,500 car. Today, half that on a better car. Her insurance company repulled her credit. Her premium dropped $62 a month. She didn't ask, it just happened. At this tier, the money stops bleeding. Tier 7, $740 to $799. Preferred. Banks have a word for you now, and preferred means the actual advertised rate, not the footnote rate, not the rate 9% of applicants qualify for, the one on the billboard. She locked in a Chase Sapphire Reserve card, $550 annual fee, offset by a $300 travel credit, lounge access, and global entry reimbursement. The room she used to walk past now opened when she scanned her card. She locked in a mortgage at 6.4% on a $300,000 home. $1,076 a month, no PMI. At $540, that same mortgage payment would have been thousands more over the years. Her bank called her, not the other way around, offered her a $25,000 line of credit, unsecured. She didn't apply, they wanted her business. Her rewards cards earned her over $100 back this year on spending she'd do anyway. Different tier, different relationship with money. Tier 8, $800 to $850. The system has run out of ways to penalize you. 6 years from her 430, she hit 824. Oldest account, 11 years old, 6 open accounts. Utilization, 4%, never 30 days late, ever. Her mortgage lender called proactively, offered to reduce her rate from 6.4 to 6.1% without her asking, just to keep her business. She walked into a dealership with a credit union pre-approval at 5.5%. The dealer dropped the price $1,200 before negotiations started because he knew she'd walk. The score gave her that option. At 430, she paid $10,220 in interest on a $14,500 Civic. At 824, she paid a fraction of that on a better car. At 430, she paid $1,150 before sleeping in her apartment one night. At 824, the landlord waived her deposit and called her a preferred tenant. Here is the full picture from 430 to 824 in 6 years. No tricks, no hacks, no dramatic moves. Just on-time payments, kept utilization low, didn't close old accounts, didn't apply for 6 cards in a year. Time plus consistency. That's the entire formula. Over those 6 years, she didn't just save money, she changed her relationship with banks completely. At 4:30, the bank decided what she was allowed to have. At 8:24, she decided what the bank had to compete for. Same person, same hard work, different price for money. Your score doesn't care how hard you work. It doesn't care that the medical bill was a mistake. It tracks one thing: how reliably you've managed debt over time. And it uses that one thing to price everything else in your life. Here's the formula: pay on time, every time. Keep your balances under 10% of your limit. Don't close your oldest account. Don't apply for 6 cards in a year. That's it. That's the whole formula a banker would tell you. No app, no service, no monthly fee can do this work for you. The score rewards one thing: time. The longer you do the right things, the more the system pays you back. 6 years from a 430, real people have hit 760 and beyond. It's not a second chance. It's the first one that takes time to earn. The clock is running whether you start today or wait 6 months. Every month you wait is a month that doesn't count toward your oldest account. Here's what I want you to do this week. Pull your credit report for free, as often as once a week through the official bureaus, or use a free monitoring app. Find your number, then look at what tier you're in. Then look at the next tier up. The distance between those two numbers is real money every single month. Start the clock today. I will see you in the next video.